Hi guys, thanks for tuning in to another episode of Nuggets News. Today we welcome a special guest from DX Exchange. That's the CEO and co-founder Daniel. How are you going?
Good, good. Thanks for having me on.
No worries. Thanks for joining us. It's great to get the brains behind everything that's happening in the STO space. And congratulations, you guys recently started listing your first STOs. But I really want to focus on the average, the stuff for the average investor today. Everything else you're trying to do. So for those that haven't followed your work, what are DX Exchange setting out to accomplish?
Sure. So first, we're a digital asset exchange, and I know that word's getting thrown around quite a bit now. But what does that really mean? For us, it means something I think a bit different. Which means we're not just a crypto only exchange. Okay, so yes, we offer cryptocurrency trading. We're regulated in the EU. For the crypto trading, we're regulated under our Estonia laws, which allows us to buy and sell crypto, including fiat trading. But then we also have we came out a new product in early January called digital stocks, where we tokenize real world assets such as Apple and Google and Tesla. And we do that under a regulation in Cyprus through one of our affiliate companies called MPS Securities. And they have a market maker license, which allows them to buy and sell and transact in real world securities and hold as a custodial for clients. And then what we've done is we basically taken those almost like a stable coin, where each digital token on an ERC20 protocol is backed by one real share. So we've launched, I think, top 12 or 13 NASDAQ listed shares. And then a few weeks after that, we launched with probably the top 12 or 13 ETFs that are out there, like QQQ, SPY. And then more recently, we've now launched a security token platform where we can start now listing tokens onto the exchange. Anyone who's done a security token offering in the market that needs secondary market trading now, liquidity for their investors, can now come to the exchange and actually trade it. And we're a bit different. So, when I go back to the word digital asset exchange, we feel like we're disrupting the entire fintech space. I don't feel like we're a competitor to, say, Binance or OKX. They're doing crypto. I feel like we're more like in the league of, say, for example, like a Robinhood or Revolut or a traditional broker, I think would be consider us. We believe that the world is going to move to more tokenized assets, whether, again, it's stock, real estate, art, yourself. But the world is going to be moving that way to a more digital way, and it's going to open up a whole lot more investing for investors. And so for us, we feel like we're the first real true digital asset exchange.
Yeah, so you've touched on a lot then, Daniel, which is great. So I think everyone is kind of familiar with how crypto trades now, and the idea of STOs and being able to buy tokens that represent shares in a company. But it's the tokenized stocks and ETFs that I really want to focus on today. And why have you guys made that your focus? Is it the fractional ownership? Is it trying to get this to the average person that can't afford one share of Apple if it's $1,000 and that sort of thing?
So the short answer is yes, but maybe I can tell you how we kind of came up with the idea. So we were getting ready to launch the exchange, which would have been crypto only, in, call it, August, September. And as you know, we're kind of in this big, long, cold winter, right? And I started saying to the team, look, we need something more. We need something to do something different. And of course, STOs have been talked about for a very long time. It's something I'm very interested in. The ICO market has been coming slower down, down, down. And STOs have been having the biggest voice, but not much had been really happening. And I come from the online trading space. So I was mainly running some of the largest Forex and CFD brokers in the world in the past. And I started thinking about how a CFD works. And maybe I think a lot of your users are probably familiar with CFDs, because CFDs are very popular in Australia. And, it's a derivative product, right? So I knew already Tesla was already trading on, say, IG index, right? And I'm sitting there going, it's a derivative in this. And I said, why can't I actually take this, do the same thing, but put it on an ERC20? Let's put it on the blockchain. It becomes a derivative product. And so we dived into the rules, and we spent like 2 months getting legal opinions and rules and figuring out how it would work and everything. And that's how basically the digital stocks were born. So when the news came out, though, people misunderstood and thought this was a security token, because obviously Apple is a security, right? But what we did is we actually did it as a derivative product, right? And, you know, again, some people came out and they were like, oh, well, this isn't really a security token, it's a derivative. Some people said it's a security token. Some people said you can't do it. It was quite interesting. I really enjoyed the discussions that I saw. But I think, you know, what it did do is it started people talking in the space again and showing what you can do even still with blockchain technology. And, you know, the benefits, what we found, which you just touched on in your last point, was that suddenly investors from whatever economic social class you came from suddenly had access. So I'll give you an example. In Indonesia, they're the third largest user of Facebook, but Facebook ownership is basically zero, right? And there was 2 reasons for that. One, they didn't have access to a broker or an account to be able to do that. And even if they did, the broker probably couldn't trade those Facebook shares. And 2, they couldn't afford a $160 share of a stock. But now with DX, they can have a more simplified onboarding process. They can come in still under good regulation. They now can buy Facebook stock with this new fractional ownership that blockchain allows for as little as $10. Now, again, somebody said to me, well, what's the matter? They put in $10 and maybe it's worth $20 or $30 in a couple of years. But for those people and those types of situations, that's a lot of money for them. And when you multiply that by the millions and millions and hundreds of millions of people, that's a lot of wealth that was created that was never possible before until we actually did this, right? Yeah. So it's kind of like the bottom billion, right? Traditional stock and ETF investing was for the middle and upper class, but now suddenly the whole bottom billion just opened up for the market.
Yeah, and I do like that bottom billion statement, but I'd like to give another example for our Aussie audience who see these plus 500s, IG ads pop up all the time, and maybe they don't even realize they're investing in synthetic assets that just give you exposure to Apple shares or gold, as you say. Now, the fact that we can go and do this as ERC20 tokens, as an Aussie investor, when you ship over your $1,000 or your $10,000 to a US brokerage account, it costs you hundreds of dollars to do that in bank fees. Then it costs you money per trade. Then if you want to take profits and send it back, hundreds of dollars again. So the fact that anyone can do this with a liquid ERC20 token, I think it's just fantastic.
Actually, it's also one thing that's I keep forgetting that you're in Australia. So yeah, plus 500, IG, CMC, all these guys, right? The sandbox I used to play in, right? And you know, you also could only trade with plus 500. Once you bought that synthetic, you could only liquidate it with plus 500. And actually, what's kind of cool about this is, so you can come to DX, you buy Tesla stock. You can withdraw that Tesla stock to your own wallet. Now, what we do is we have to whitelist that wallet. So your wallet address gets actually written into the smart contract of Tesla. And there's 2 reasons for that. One, we need to make sure that if you want to transfer that Tesla stock to somebody else, which you can do now, which you couldn't do with plus 500, they need to be whitelisted too. And it's because we need to understand where we need to pay dividends, corporate actions. So we need to keep track of where the tokens are. And 2 is, for example, under our law, certain jurisdictions, for example, U.S. customers aren't allowed to trade derivative products, right? So we need to make sure a U.S. customer doesn't get access to that. So you know, it's kind of neat that you could actually take your Apple or Tesla shares and bring them to your own Ethereum wallet and hold them yourself. And then you could actually trade it with a friend who also has a whitelisted wallet, and you could actually do a cash transaction or however you want to do it between each other. So it does really open up the world. But I actually want to make one other point is, we talked about the bottom billion, which I think is the most disruptive piece in this. But what's also interesting is that even for, say, middle-class wealthy, this is very good for them too, especially on the fractional ownership, because you've heard of a gentleman by the name of Warren Buffett, right? His Berkshire Hathaway stock is $302,000 per share, right? Yeah. I can hear your new son.
Crying in the background, is he?
Yeah, it's $302,000 a share now. But now with the tokenization, even wealthy investors, which is a lot of money, they have now access to Berkshire Hathaway. Even the Indonesian farmer now has access to the Berkshire Hathaway shares. So it really does, I believe it's a bit of a game changer in terms of the whole financial revolution here.
I'm loving this conversation, Dave, and you've got so many points that I want to run by you. But the first thing I want to touch on is synthetic assets. So most people are familiar that Tether is meant to be backed by $1 in a bank somewhere, that we have DGX that's meant to be backed by gold somewhere and it can get audited. So how does the custodianship work? As you said, dividends, how does all that work? Is it audited? Can you discuss that?
Right. Sure. So MPS, they're regulated, as I mentioned before, under CISIC's market maker license, which has to follow the rules of the entire EU because Cyprus is part of the EU. So they follow the MiFID II and ISMA direction. And under those rules and regulations, that's what allows MPS to be able to hold the real world stocks as a custodio to back the digital token. And I believe we have KPMG that audits on a monthly basis the digital tokens that are out there and the actual real world stock that MPS holds. And then we'll post it on our website to just show that there is this full backing 1-to-1. And it's also backed literally by the shares. So for example, you mentioned Tether, and now we recently found out that actually Tether may make loans and it's not fully backed and some other disclaimer. In this case, it's actually is 100% backed by 1-to-1. And one other point I want to make in terms of the fractionalization. So if, for example, somebody buys a quarter of a share, MPS buys one full share, so they're always rounding up to make sure that they always have a stock covered.
Cool. I have this theory that central banks are having such a hard time in developing countries. And as you just said, the fact that someone in Indonesia can park their money, if they decide that their fiat currency is becoming worthless and they can park it in Facebook shares, I think all these developing countries are going to have so many options. And I see it as something that might even create inflation in the US, for example, because there's so much money floating out there looking for a home and valuations have already tended to go out the window a little bit. So do you see all this money that's going to try and park itself in these assets, or are there so many assets that we can start to tokenize and just it's going to be a smorgasbord?
You know, it's an interesting question, and I've thought about it a few ways. To me, what I thought the lowest lying fruit was for people who already had crypto, right? So what is the market cap today? Maybe 140 billion, 135 billion, something like this. Yeah. So technically, the only way for somebody who has a lot of crypto that doesn't want to, say, liquidate it, the only option for them to sort of hedge it is to get into one of the stable coins, right? Yeah. But now they can take that Bitcoin and actually put it into Facebook or Amazon, which I think that's kind of a really great way of diversifying your crypto holdings, especially for these large whales who have a huge portfolio of crypto, and they not only are not just hedging at almost a 1-to-1 with maybe a fluctuation of 0.5%, but they could actually invest it into Amazon or Facebook. So to me, I think that's more of the low lying fruit. But to your point about this, now you have potentially 1 billion people on the planet being able to have access to different asset classes. Look, if it was only limited to the U.S. stocks and or some of the Asian stocks or European stocks, you're right, there may be this inflationary thing. But what I think we're going to see is we're going to see this explosion once the secondary markets start opening up more for different types of assets, especially around the real security tokens, not just the derivatives. That there's going to be such a wide asset variety of people to be able to invest in that. I think that inflation will be very minor. I think what you're going to actually see is you're going to see assets that maybe were very undervalued or in a very closed market have a much more fair market price. So, for example, where actually you might see some devaluation is actually, I think, and maybe possibly art. As an example, a Picasso painting, right? It gets tokenized. Right now, because it's not tokenized, it's only available for a few buyers in the world. And if two buyers square off against each other, the price goes crazy.
There's a very wide bid-ask spread in a lot of these things. Yeah,
exactly. But if now that Picasso becomes tokenized and it's open up to 10,000 people, right? they're going to be constantly buying and selling this, which is great because it creates liquidity. And of course, it's a Picasso, so it'll still go up in value, but it actually might become a more stable asset to actually be able to hold on to and trade, you know.
Yeah.
So
one of my theories about the total crypto market cap is we're going to get to $1 trillion a lot quicker than people think. And that's not through Bitcoin having a huge run again. I honestly think it's all these assets that you just described. Once they start getting listed on the coin market caps and so on, there's so much that is just going to be counted as a cryptocurrency or a digital asset. And I think that total market cap is just going to explode.
Yeah, I definitely agree with that.
In terms of derivatives, that's often a dirty word that gets thrown around. But as you've described, these are all backed one-to-one. So even though they are kind of synthetic, it's not really like we think of Wall Street where there's a derivative and we don't know if there's 100 claims on that one bar of gold. And again, I think this is just making the crypto space more of an attractive option. Why would people speculate on gold or derivatives in that market if they can come and play with these liquid tokens and assets that they know are on a blockchain and backed?
I think the one thing about derivatives traditionally, it's all about, you know, when I think of it anyways, I think it's leverage, you know, which is even a dirtier word than derivatives, right? And it's also about ancillary fees, right? Lots of charges, right? So there's a lot of carrying charges, okay? One of the best things that that was a kind of a byproduct of the digital stocks or ETFs was there's no carrying charge, right? You know, if you go and buy Apple shares, it's very leveraged, and you have to pay a lot of money on a daily basis, right? And so you're right. It's kind of like you're buying the actual stock, and so for me, it's, even though it is a derivative product, the regulatory body that we spoke to at first, they're like, what? Wait, what do you want to do? And then we're showing them, and they're like, okay, yeah, I guess that you're right. That is legal, and actually, this is a better product than a CFD because there was no leverage. There's none of these high fees. You know, there's no middleman. There's no broker taking the other side, you know, the trade, hoping that you will lose instead of, you know, win. It's actually a perfect product for them. And, you know, one thing I think that the regulatory bodies around the world, they have a really big opportunity right now. And I don't know if they really understand this. Whenever I talk to the SEC or to some of the EU guys or out in Asia, I try to reiterate this to them. And then the point is that, you know, all these brokers out there that are trading and marketing to clients, right? There's this direct conflict of interest. They're saying, come trade with us, we'll give you education, but how do they make money? Well, because you lose money, right? And for years or even decades, the regulatory bodies, you know, have been putting clamps down on leverage, on the way, you know, people trade, because they really, what they want is they want the clients trading on an exchange in an open and fair marketplace. But the problem is they created the broker world, and they know it's too big that they can't really close it. So they just throw tons of regulation at it. But what we kind of had this new thing with the new digital assets, and this is why we feel like we're like this new, it's not a digital broker, but it's a digital exchange that's taken all the products that brokers traditionally offered, and we're on exchange now. And this is a great chance to change the industry the way it is. So as we move into this digital age, in my opinion, the regulatory body should not allow brokers anymore. Or if anything, they should allow them, make them sure that they're clearing through one of the digital exchanges. And, you know, before crypto, I think it was a very hard learning curve for customers to understand and look at a platform and see the bids and the offers and how the exchange works, which is very different than how a broker would work. But now crypto has kind of educated a good layer of that market already. So there's this learning curve that would have normally had to been learned, but I think that's already started. So, you know, there's a big opportunity here to really start moving everything on exchange, which would make the, you know, the regulatory body much, much more happy. Yeah.
And what you've just described is blockchain technology cutting out another unnecessary middleman that's been rent seeking. So that's fantastic.
Yep.
For people that are sitting at home in different countries, obviously anyone can buy crypto. Can anyone, I take it, sign up with DX and trade these synthetic assets you've described? How does it change for different people with different jurisdictions if they want to get involved in an STO? Or does it not matter if you're accredited versus non-accredited? Does it depend on the individual offer?
It does. And so basically, the way I'm kind of now coining it in the last week since we've launched the STO platform or marketplace, we're calling it. There's 3 levels, right? When a customer comes to us, pretty much anybody with the exception of US customers in certain jurisdictions like Iraq, Iran, so on and so forth, can come to the exchange, sign up, do some basic KYC, and be able to trade crypto. Okay, and then that's Bitcoin, Ethereum, altcoins. And then if they want to trade the digital stocks, there's a tab, they'll click on it. There'll be a couple more questions that they need to answer. Once they pass those questions, then they'll get access to the digital stocks, digital ETFs. Then if they want to get access to the security token marketplace that's going live, again, they'll click on that tab. Again, they're going to have to answer some more questions, go through some more KYC. Basically, what we're doing at that point is we're approving them as either, well, in Europe, we call it a professional trader. In the US or some other place, they might call it accredited investors. Yeah. But basically, based on your jurisdiction, whether you're from Japan, you're going to get a certain number of questions. If you're from Europe, you'll get different questions. Australia, you'll get different questions. Once you pass that, you'll get access now to the marketplace for security tokens. So one person might have access to all three. One person might have access only to the first two. And then one person might only have access to the crypto.
Cool. So what are your favorite assets that you're looking to tokenize? Is just going down the list of those most traded ETFs? Because I know we have so many people that want exposure to uranium, an example, in Australia, and it's so difficult for them to do. We don't have a good ETF. So I'm sure if I said that, hey guys, you can trade this synthetic URA ETF with DX Exchange, it's those sort of products that you're looking to give to people?
Okay, so obviously from a strategic standpoint, we're looking at what is the most traded in each market, and we're going to be adding those very, very quickly. So over the next 3 months, we're going to be constantly adding new shares, new ETFs from all different marketplaces. But the one thing is that we really listen to quite a bit is our community. We have a pretty good following, and we're as active as we can be in the channels. And so, look, if somebody sit there and says to us, hey, in Australia, we really want to trade the uranium, right? You know, we need access. Okay, and if it makes sense to us, we'll go ahead and add it. The best thing about right now with us working with an ERC20 token is pretty simple to create. So, and we have plenty of room on the platform to be able to add it. So, so again, strategically, we have our own, but we very much listen to the community, what they want, and we'll put it on.
Fantastic. Well, Daniel, any final thoughts for people? What things are you most excited about? Where do you see the space at the moment coming to the end of crypto winter? And I'm sure you've been privy to some fantastic conversations about where this is all heading.
Look, you know, I think eventually we'll get out of this whole crypto winter. When I'm like you, I could make a guess, and actually I think I'm not even allowed to anymore make actual real guesses as an exchange operator, which is actually quite funny. Being an American, I have dual citizenship between the UK and US, but being even American, I'm not even allowed to trade on my own exchange. But you know, I see. Look, I think, let me put it this way: at DX, right? We don't want to just sit around waiting for regulatory bodies to wake up and do something. We're trying to be proactive while working with the regulatory bodies. So it's not like we're unregulated and jumping from jurisdiction to jurisdiction. We haven't moved once. We've had just one jurisdiction. But the point is, we have a really open dialogue with the jurisdictions that we're working with. We actually sit and meet with them once every few months or less in some cases. We're playing in their sandboxes. They're giving us, you know, a lot of leeway to do things. So, you know, we want to continue to bridge that gap between the old world and the new world. Yeah. It's the old and digital space. And, you know, it's interesting how we keep coming up with these revolutionary products, and it's what's needed in the space, and it's what we need to create conversation and create dialogue desperately. And it actually wakes up the regulatory bodies, and they'll look at us and they'll scrutinize us. But at the end of the day, we're doing it legal, right? And it's interesting how there's these groups out there that are advocating, whether it's an STO or something, and then they see something we do and they go, oh, wait, you can't do that. You're doing it illegally. This is really bad, right? And it's because they're most likely either coming from a very one mindset, maybe it's a US perspective, maybe it's a different jurisdiction. And instead of just saying, hey, you can't do that, come talk to us and we'll show you how we did do that and how we are doing it legally. And we should be working together, not trying to put each other down to try to figure out, you know, how to advance this space. Because, again, I'm American, but the SEC doesn't rule everything, right? There's a bigger world out there. And quite frankly, a lot of what we're doing here outside the US, we're setting up so that we can launch in the US, because then we can actually prove to the SEC, look, we've done it this way. This is what it's working. This is how it's done. We've got real cases. And, we partnered, or actually our technology partner is NASDAQ, right? So, it's like we're doing all the right things, and we're trying to advance the space.
Yeah.
And, I think, we need to continue to support each other, because there's plenty of business out there. I mean, this market's going to be worth trillions of dollars, right? And it's not one company or 10 companies, that are going to own this, right? And so, look, we're going to continue to, push the space, and while working with regulatory bodies and come up with new innovative a digital product that doesn't even, actually my partner and I were sitting here just this morning thinking of a new derivative product, non-leveraged, right? So, but a crypto derivative product that could be amazing for people to have, to be able to trade and hedge themselves, or even to trade crypto. So there's a lot new things I think that we're going to see that's going to be developed on the back of blockchain technology. And again, open up the world for all types of investors.
And as you say, it's particularly frustrating. We sat down with Australian Treasury last week, and you say the SEC, and they sit down, they and ah, and you're just watching one by one all these other countries surpass us, and the talent all go there. And I think that this is going to have way more impact in the developing nations.
Again, with security tokens, there are rules out there already, and actually they fit. You're just basically digitalizing it, right? And that's where I think a lot of people get confused with, and especially regulatory bodies. So I don't know. It's an exciting space. We're going to keep pushing the envelope. I think anybody can reach out to us at any time and ask questions. I know the SEC has probably through back doors and channels, and we're fine, right? So. Again, I think we just need to continue to support each other, and I'm happy to try to help anybody out anyway, whether it's security token, digital assets, crypto, you name it.
Well, guys, I am going to put the link down in the description below to join up to DX Exchange, and hopefully we're going to be working where we have even a custom little Nuggets news portal for you guys, possibly at some stage in the future. So thanks so much for joining us today, Daniel. It's been a great chat.
Yeah, great, and happy to come back in a couple months and give an update on progress.
That would be awesome. Thanks, guys.